GR Energy Services technologies make the difference in completion, production, and water management. GR technical and operations teams are helping operators achieve record-setting performance. Learn more at grenergyservices.com.
Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratas Advisors. Brent continued to drop last week, falling $4.29 a barrel to average $58.70. WTI fell $3.82 a barrel to average $53.12. Clearly, negative momentum is carrying the day, and based on technical indicators, there's still more room to fall. For the week ahead, we expect Brent to average around $58 a barrel. The week ahead will see trade negotiations between the U.S. and China recommencing, and a lack of progress would be highly detrimental to prices. We remain cautiously optimistic that a trade deal can be struck, but for this week, all we're looking for is signs of forward progress. At a minimum, both sides are likely invested in staving off any further increases to tariffs. If the White House proves to be too unpredictable of a negotiating partner, then Beijing could revert back to wait-and-see mode. Adding to trade concerns, the World Trade Organization has given the U.S. clearance to impose retaliatory tariffs on European goods in response to years of unfair European subsidies to Airbus. However, while the subsidies occurred in the civil aviation sector, President Trump has threatened to impose tariffs of up to 25% on consumer goods that enter the U.S., including cheese, wine, and clothing. This could severely impact spending on those items heading into the holiday shopping season. Geopolitics will be a neutral factor for the week ahead, with no further developments over the weekend. The global economy will be a negative factor in the week ahead. The most recent raft of economic data showed that more sectors of the U.S. economy are turning negative, following in the footsteps of manufacturing, trade, and transportation. Supply will be a neutral factor in the week ahead. Rigs fell in the United States as refining slowed down slightly. Oil demand will be a negative factor in the week ahead. Product stocks in the U.S. remain mixed, with gasoline above 5-year averages but below last year's levels. In Europe, ARA stocks have been trending throughout the summer and are now generally at 5-year averages. Singapore stocks are also generally below average. With fall maintenance coming up, product stocks are entering wintertime somewhat balanced, which should provide some protection in case demand starts to decline.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us.
GR Energy Services technologies make the difference in completion, production, and water management. GR technical and operations teams are helping operators achieve record-setting performance. Learn more at grenergyservices.com.
For more hard energy videos, follow our social media channels.